Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, over the last 8 trading days, the Australian dollar remains parked above the support level of 67.40.45. And at present, from a technical perspective, if you look at the MACD, as it's just about breaking over the zero axis here, and also with the RSI, which nearly brings a marriage, could still see a move to the upside. This could see a rally on to 68 cents, which has failed, as you can see, many times, and with a cap still holding at 68.45. Now tomorrow, all eyes turn to Tuesday's August RBA meeting minutes, to which is highly expected that the RBA will keep to a dovish tone, indicating recently by the RBA Governor Phil Lowe. It is assessed from the upbeat employment number last week that the market will be expected to keep rates on hold in the September rate decision meeting. Therefore, could still see a small squeeze up. Last week, a surprised strong number of job increase by 41,100 for June crushed the estimate of 14,000. However, the unemployment rate still remains at 5.2%. Full-time jobs rose by 34,500 and part-time jobs rose by 6,700, which by all is a relatively good number and no doubt will keep the RBA happy in the short term. But some may not see this, and there could still be some calls to a cut, but I don't feel this would actually eventuate, and therefore likely to see for September and no change in policy in rates. However, in September there is a lot of talk that the fact that we could see the euro fall slightly further to the downside, because last week the ECB Council member Ollie Rehn said that the ECB will announce a package of stimulus measures at its next policy meeting in September that could overshoot investors' expectations. Moreover, he's added that it is important that we come up with a significant and an impactful policy package in September. Finally, he said that when you're working with the financial markets, it's often better to overshoot than undershoot, and better have a solid package of policy measures than to tinker. From a technical point, though, is that market will be concentrating on the Fed's minutes on Wednesday, but the main theme will be for Friday when Federal Reserve Chairman Jerome Powell kicks off the Fed annual Jackson Hole surmises in Wyoming, which is probably be the main focal point to the market this week ahead. We need to see how the central bank in the US is going to clarify whether or not they're beginning a several rate cutting cycle or just intending to cut a few times as insurance against a possible downturn. But keep an eye on Wednesday for the Fed minutes to see what reveals in terms of the discussion about why they cut rates last month, which the market will be keeping a close watch to. From a technical point, you can see here that from a bias that ADX is trending, that I am looking still towards 110, 20, 60 area, and continue to lower your stop losses in accordance to your risk management in case we do get a bounce back towards 111.90, which is where the resistance seen for this week. Dollar yen still churning within this range of 105 to 107 and likely to continue until we get a little bit more confirmation of the technicals, which at this stage looks a little bit bullish, and therefore could see a break up towards 106.45, which has been tested this morning, but 106.80.90 may still continue to cap. The pound has been pretty much directionless now for 2 weeks, though we are getting a little bit of an uptick here as the technicals are strengthening here, and could see a move up to this downtrend that pretty much has been around now for at least over the last few weeks, from the late April, which is actually close to about 3 months. So the direction at this stage, slightly biased to the upside, but I would like to see further confirmation from the two to support this, and therefore see if the market can surge, but unlikely due to the no Brexit deal that continues to threaten. The outlook so far for gold is a little bit concerning, because As you put these levels from rising highs, you can see on the flip side to the RSI, we're getting a declining indicator along with the MACD. This to me is bearish daily divergence. It could give some risk that the bulls are getting a little bit exhausted to the upside after the spinning top here, and also the failed attempt has posted a very weak outside range day. Nevertheless, I do expect to see a pullback to 1,498. Now they could see a break lower, but the base or the foundations is still around 1,474 to 78. Do be aware though, no trend anymore, but the divergence and the weakness does imply a bit of a soft start to this week. Finishing off with oil, well, the market is now looking back to this little mini trend line that comes across here, close to around $56.60. Now I do expect to see a cap from there. Until we get a clear break of the level above 57, then we're still looking to the downside, maybe to 53 to 52, because the technicals are a little bit mixed. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to this new week.